All right, 30-year mortgage rates hitting their lowest level since last October. And that's giving a boost to home builders. D.R. Horton, Toll Brothers, Lennar, Pulte, all up more than 2% today. For more on what's next for the housing trade, CNBC's Diana Olick joins us from the Zelman Housing Summit in Boston with an exclusive interview with Ivy Zelman. Diana.
Thanks, Melissa. Ivy, it was your day today. What an amazing day. Hundreds of people here to hear everything. I'm going to take you back to 9 a.m. where you had 87 slides on the state of the housing market. But the most interesting one to me was where you said that home prices will go down next year before coming up again in 2027. How do you see that?
Well, it's really a tale of two geographies regionally. We have geographies that were the COVID winners, and now they're decelerating as we're seeing net migration under pressure, even lower in some states than it was in 2019, as well as really elevated resale inventory. And the inventory is then being pushed, even prices being pushed lower because the home builders, their market share has grown so much in those markets. They've oversupplied the markets with spec. So when you add that, lastly, employment, you're looking at those markets that will be pressured. Whereas the other side of the coin are markets in the Northeast and the Midwest that were COVID losers that are seeing improving that migration. Inventory is kind of still well below COVID levels, and employment that's actually holding up. So what we're looking at are really all-in prices, we think in 26 that will be down about 0.8%, barring affordability doesn't improve dramatically.
But, you know, you focused on affordability, and let's talk about the builders specifically. They've been buying down mortgage rates aggressively. Your number was 73% of builders, and more than half of them were buying down by more than 100 basis points. So if they're lowering rates into the 5% range already, then we see rates come down even more by the Fed, perhaps. Then you're having affordability is improving. Yes, doesn't that send many more people into the market and therefore push prices higher?
Well, the builders have been pretty much offering mortgage rate buydowns when rates started going up in 2022. So today there are 1 to 2 years as low as 2.99, 3.99, and then for the remaining 30 years left, they'll do 4.99. So they've already been making it a buyer's market, providing very good value and affordability. So the real question is, will they keep providing mortgage rate buydowns as mortgage rates prevailing come down? And I think they will, because
but it's hitting their margins. I mean, you said it.
But the margins will be less impacted because it gets less expensive as rates come down. But they have a lot of spec inventory, and it's not like wine. It doesn't get better with age. So they're motivated sellers, but the velocity that they want to keep sustained is going to be driven by the incentives. And while it might, on the margin, decrease a little bit, I think they're going to stay very active with buydowns.
But you bring up spec homes, and there's been this kind of argument here because you showed that D.R. Horton and Lennar are 100% in on spec homes, and you said, I think that's the right way to go. I talked to Ryan Marshall of Pulte. He said, I don't think that's the right way to go.
Well, think about this. If you're worried about the job losses accelerating and builders are speccing, they're providing the consumer a mortgage rate buydown. If you do a build to order, you can't do a mortgage rate buydown. The timeline to close, call it 6 to 12 months, it's too expensive to take the forward commitment risk. So if in fact you think you want to get growth, build to order might be under much pressure. We have builders that are going into 26 with backlogs down 30 to 40%. Wall Street won't like it if they're not going to grow. Now, if you think the economy is going to get better because rates are coming down and job losses won't be a concern, then obviously pricing power will come back to the market, and Ryan Marshall on build to order could be right. So it's really where you stand on the economy. But I think builders that are speccing are doing so because they want to offer mortgage rate buydowns and provide new move-in ready, which was demanded during COVID.